If you're new to crypto or have not yet fully experienced the Bitcoin 4-year market cycle, then don't skip this video. Understanding when and how to work the Bitcoin cycle is essential to being successful, not only with Bitcoin, but with any and all altcoins. To everything there is a season. King Solomon and the birds both sang about this, and crypto is no exception. Today we break down the Bitcoin cycle and use it to formulate a trading cycle plan to help us reach financial freedom. And toward the end, I will break down how I trade and invest in all 4 seasons of this cycle. Road Dog Crypto. Welcome to the Chart School series here at Road Dog Crypto, where you can learn all the secrets to become a successful crypto trader and investor for free. My name is Lane, and I will be your Sherpa on this climb to the top today. Every market has a cycle. A repeatable succession of events and price action that ebbs and flows just like any other wave. In crypto, Bitcoin is the master wave, the one that you want to continually observe, especially if you're trading or investing in altcoins. Cycles have repeatable S-curves that oscillate between a high and a low. It's kind of like a roller coaster, basically, going up and down over and over. Now, Bitcoin, by design, has a 4-year cycle of oscillation, which is based on an event called the halving. Now, during this event, the code reduces the number of newly mineable and minable Bitcoin by half. And within a few short months of the halving, the supply crunch has historically led to new all-time highs in each new cycle. So knowing where we are in the current Bitcoin cycle can help us enormously to exploit all the potential profitable times to trade this market. So here's how it works. Market cycles are composed of 4 seasons. It begins with an accumulation phase right over here at the bottom. And this is where the smart money begins to start stacking their bags. After the accumulation comes the markup phase right here, where eventually a supply crunch will lead to higher prices. Now, this is also called an impulse move. And over time, we gradually reach a distribution phase. And this is where the smart money begins easing out of the market and selling off. And this produces an intense selling pressure that now reverses the trend and leads us down into the final stage of the market cycle, which is called markdown. Now, it's during this phase that people are starting to take late profits, starting to get scared out of the market, and people who are also starting to short the market. Once this cycle completes, it's wash, rinse, and repeat. It just starts all over again. And we want to use this information to our advantage. But not only do market cycles affect price action, but they also affect trader psychology and our emotions. And this is truly the key takeaway here from this video, as you will soon learn that trading and investing is mostly a psychological endeavor. In a nutshell, Bitcoin typically reaches a bottom point in the cycle about 1 year after making a new cycle top or a high. Now, this starts in the accumulation phase when prices trade in slowly sideways. And it's also common to hear price predictions about super cheap prices as the whole market sentiment kind of turns bearish. We are currently going through that right now in the Bitcoin market, where people were saying that we're getting ready to go to $10,000, and we're currently hanging around the 21,000 mark at the moment. Now, during this phase, some people are quick to buy the bottom as price drops, and some insist on waiting for a price so low that it may never materialize. We may never reach this 10,000 that people are talking about at the current moment. During this accumulation phase, which is usually a long time, a lot of people become bored with Bitcoin, and they may either leave the space entirely due to the lack of profit or the boring price action. Some will turn to altcoins in their boredom, and that kind of helps to fuel that fire. This phase can last between 12 to 18 months on average. But it's in this area that the smart money starts accumulating, and that's an idea that's worth copying in my book. Now, this next season, the markup, this is a fun season when everybody gets happy. This is when the Bitcoin happening has already come and gone, and we're starting to get that price squeeze and prices starting to go up. We're starting to feel that crunch in the supply. And for instance, right over here during our last accumulation, this is when BitBoy decided to first leverage trade, and he turned $100,000 into 1 million. This is when you can throw money at just about anything and it sticks and becomes profitable. This is a great time. So it's hard not to be profitable during this phase. And that's why it's so easy for people to get caught up in that moment and to think they're a genius and got everything under control, and then it's gone. They lose sight of the next phase. This market has periods of being on fire and moving quickly, and then it just kind of slows down and trades sideways in an accumulation before it just starts taking off again. This is the part of the cycle that we all dream about, and the smart money takes profit along the way, and let that be a lesson. So should you. But you know, all this excitement and for it can't last though. And we finally reach an area that we just can't seem to break beyond, and that's our distribution period. This is because all the smart money that accumulated earlier in these cycles have decided to take a bulk of their profit. This is the top area right here. It's also common to hear price predictions in this area to outlandish prices like 300K, 150K is what we heard in this last cycle with Bitcoin. And you even start hearing people like at the grocery store talking about crypto. You'll start seeing it pop up on the night nightly news, or even see it on Saturday Night Live. It's freaking everywhere during this phase. Retail is starting to FOMO in, fear of missing out, and the smart money is right there waiting to dump all that they have into this new pressed liquidity called retail traders. And when smart money does that, the price starts going down. All the retail that's just gung-ho in the game, and even your YouTube influencers are just all on that bandwagon. It's just a pullback, is what everybody's going to say. It's going to go higher. It just got to take a breather, man. Got to give the market some room. Just keep buying that dip, man. We're all going to make it. You just hodl on. Keep those diamond hands, baby. And this is the early stage of markdown right here, when we are going back toward the bear market. Most of the market doesn't realize it's in a bear market until it's almost over. And this early stage of the markdown is where the smart money is mostly cleared out of their spot positions, and now they're going to take leverage positions to the downside as they continue to sell off their huge spot holdings. Almost sounds like a rigged game, huh? The smart money sells into every bullish rally, and they keep driving prices down until retail holders and traders feel that they are trapped and they cave into the pressure and sell under distressed conditions. Then we just start this game all over again. So here's the deal. Just like the smart money, you need a seasonal game plan. So let's look closer at some of the options that you have during each of these cycle seasons, and let's formulate a plan that will help us to capitalize on the overall market cycle movement. Or let me give you an example of how I work the strategies, and maybe this can help you to formulate a plan for yourself. But during the accumulation phase, like what we are in now, after we get a signal that kind of confirms the bottom to us, and by my strategy, the pi cycle signal is one of those. There are several other signals that do it. I have some EMA crossings that signal the bottom to me. So in my strategy, I believe that 17,800 was the bottom. However, we could revisit it. What that tells me that by my strategy, I've defined this as accumulation phase, and how I work the accumulation phase is that I dollar cost average. And I also work on building up my long-term holds. I'm focusing during this phase on filling my bags just like the smart money so that I can take profit during the impulse move that will come during the market phase and also at the distribution phase. So I'm focusing mostly on the blue chip coins, top 10, top 100 coins that really appeal to me, that have had a good price history in the last bull run and should have good price action in the coming bull run. And I'm looking mostly at layer 1 coins, layer 1 being the main blockchain that other dApps are developed on. So Ethereum instead of, say, Uniswap, although Uniswap might be one to consider. So layer 1 coins, and also coins that can be staked, because if I'm going to hold these, I might as well take advantage of that and get some return on my holding investment. Zilliqa is one, for instance, that I like. I can stake that as I hold it. So that's what I focus on during accumulation. And when I talk about long-term holds, now these may be coins that I hold for a year to 2 years. These are the ones that I'm waiting for the next distribution event, which should be around 2024. Now, during the markup phase, which is what I currently think that we are just now getting into, this is where I like to build my midterm holds. Now, midterm holds are usually coins that I'm going to be holding for a couple of months, maybe up to a year. These are those things that I'm saying, hey, that looks like a good one. It had good performance. I believe it can get up to this point. I'm going to set a strategy to buy this, and I'm going to sell it at this level because I think it can get there over the next couple of months. There are a lot of coins during this phase that it's easy for them to 2x or more during this little leg up. So that makes the markup season of this cycle perfect for doing the moonbag strategy. So when a project that I get into, when it finally meets that 2x mark, I can sell half of it. Then I have no more risk in it. I've got my money back, and I've got free crypto that I can ride out. If it goes up, it goes down, it doesn't matter. Moonbags are excellent. During the market times, also when I will start trading more, usually more swing trades. Sometimes I will do a little day trading here and there. That's very tedious, very time consuming. And in my history, it hasn't been nearly as rewarding as my longer term hold strategies and my midterm hold strategies. My swing trades really make the bulk of my earnings. But hats off to you that love to day trade. One area that is excellent to get into during this market phase is DeFi. We haven't got into that on this channel. The Osmosis Dex is one of my favorites, just to give you a primer there. But if you're in these coins, you can also put them into DeFi, maybe doing some pairs there, earning some income, or just using their staking. But DeFi can be profitable if you know how to use that. Another thing during this time, I like to look at those low cap altcoins, these degen trades, those things that you can get in on the bottom, just throw 50 bucks into it, and hey, you could watch that turn into 500 or 1,000 during the cycle. But the biggest thing that I like to do during the markup phase is look for those altcoin season. Might get a full-blown altcoin season during this when Bitcoin dominance starts going on a tear to the downside. May get these little mini moves, these little mini altcoin seasons. But those are the things in this market phase. This is where you really see your profit come into fruition. And this is the point where you want to dig your claws in, but you also want to make sure that you are taking profits along the way, because there's nothing worse than getting to the top of the roller coaster and then finding yourself at the bottom of the roller coaster just like that and having nothing to show for it. All right, now during the market, we come to a point where we just start hitting a ceiling, and we'll hit that, and a lot of times we'll hit it a couple of times, which gives us a little range that we can work with during the distribution phase. The biggest thing to remember during distribution is that you need to be taking profits, all right? Everybody's going to be saying we're going up more, it's just a pullback. You've got to be taking profits during this part because that's what the big money is going to do. And I can promise you, price is going to go the other way within a certain amount of time. They're going to take profits and the price is going to go down. While everybody else is screaming for those higher prices, you need to be looking at the indicators, seeing those sell signals, and taking advantage of those. So during this time, take profits. You can possibly trade that range. It's a lot more riskier because you're buying at resistance here, and it could easily go against you. But one thing you can do is really work your altcoins. Usually Bitcoin will top out, and then altcoins will start topping out about a month later, about 4 weeks afterwards. So when Bitcoin starts reaching these levels, you should start seeing some improvements in altcoins, and you need to be taking profits in those then. Let's pull some of this cash out. We need to be starting to get cash heavy now. And lastly, a thing that you can do is start slowly building short positions, learning how to short this market for what's coming up. And finally, when we come to the markdown phase, we've got to be out of this market. Now, here's the best way that I found to do this, okay? Whenever we are on the markup phase, if you will draw a trend line and draw it all the way through that leg, I got this one. This is our most basic trend line. We kind of got up and away from it. So this is our lower trend line that I've got. I've made it red because that's my exit point, okay? When price breaks below that, that's out of it altogether. Now, I've got another trend line here in yellow, and that one, if I use it, that can be some good gauges for me to take profit. If I see it break below there, I'll sell so much. But when I see it break below this red one, I want to be out of that market completely. Now, if we'd done this, could have ended up selling not at the top. It's not about getting the tops and bottoms because that's just really hard to do. Most people make their money in the middle. You'd be taking profit along the way and you get out of this market at about 54,000. That was the line in the sand, saved you all the crap that we have went through, dropping all the way back down to 17,000 slowly over a year. That's how you play this game. Take your profits here, wait, you might get a point to get back in like we did here in July 21. Ride it up again. You still got the same thing going on. You got your line in the sand when to exit out of this market completely in your cash so that you can buy again whenever the bottom is confirmed. When we're going through this markdown phase, ignore all the stuff that you're hearing about buying the dip. You can learn how to short the market. You can either do this by leverage token or actually using leverage positions. You don't even have to use leverage to do it, but you want to get out, take that cash, and have it ready to go. Some people do a leverage trade, maybe use a margin account, maybe 2 to 5x. We'll start getting into some of that stuff, but if you're a beginner, stay away from that altogether. Futures trading and all that, stay away from that. That is for experienced traders only. The trend is your friend, so that's why you don't want to buy the dip. You don't want to be buying during this downtrend. It does you no good. You just have to wait until it gets back up past that price to get in profit again. That could be years. Stay largely in stable coin or cash during this phase. Formulate your strategy for the next cycle. And, you might want to just take a break. Take a vacation from crypto for a little while. You can ignore all this stuff because you've got from the top to the bottom at least a year. The important takeaway here is to trade the overall trend. Now, there are certain actions and strategies that work better during the different market seasons of up, down, top, and bottom, but realizing this ahead of time will allow you to make plans on how to benefit the most from these seasons in the altcoin cycle. So look over these ideas and see how you can incorporate them into your overall plan and strategy. Now, millions of people will be coming into this space over the next few years. Crypto adoption is here. We're going through it now. They will be just as clueless as we were when we first started, and they'll lose money to the smart and experienced traders and investors just as we have. The only difference is that this time you're going to be on the experienced side of the equation. My name is Lane, your crypto road dog, reminding you that you too got this. Until next time, stay positive and trade wisely. I don't always like videos, but when I do, I always prefer Road Dog Crypto. Trade wisely, my friends.